Hey guys, this is Rudy for Bester Investor, but you may also call me Mr. Oxy if you'd like, because this particular video is going to be all about Occidental Petroleum. It is Saturday, it is September the 25th, and I am recording this live in Palm Beach in Florida. I've just returned from North Carolina, and I can tell you that business is brisk. The two airports that I transited through, so Fort Lauderdale down in southern Miami, and Charlotte International in North Carolina were packed. In fact, when I arrived at the Fort Lauderdale airport at the beginning of my trip, I drove myself there, and when I arrived at the airport, it said the long-term parking was full, which means that lots and lots and lots of people are traveling. That also means that you have to park in the short zone parking lot for an extended period of time and pay an extra fee. But anyway, as it is, I've just returned, and I can tell you that both airports and certainly both flights that I was on for this particular trip were chock-a-block full, not one empty seat, no one on standby got a seat, and that's the end of that. So if anybody is wondering whether the economy, and from that point of view, I can specifically obviously talk to the US economy because that's where I am right now, is starting to kind of tick over and gain steam and return to some sort of sense of normality. I can tell you that in my travels, and I travel a lot, I see this almost every single day. I mean, like this is a recovery in the making, and it's going to impact the energy prices that we follow, natural gas, WTI, and Brent for sure. And in addition to that, it is going to be super inflationary, because as the price of energy goes up higher, the prices of everything else that we consume will also go up. So that's not necessarily good news, but lest you be concerned, the rest of this video is good news. So let's quickly open up this presentation here. I wanted to share with you about Occidental. There's been some news lately, and in case you've missed it, I thought I would put together a quick presentation to kind of walk you through it. Is this the tipping point for Occidental Petroleum? And the reason why I phrased the question that way is because here we are, sort of at the end of the second month of the third quarter. We've had WTI, which is obviously the primary source of revenue for Occidental Petroleum, kind of hovering around $70. It dipped below on one occasion for a couple of weeks or a few days or so, and it's been above. But anyway, here we are, 2/3 through Q3, and WTI, the primary source of revenue, is still at around $70 a barrel. Occidental is printing money at this current price and doing really, really well. Now, of course, we don't know necessarily what the macro entails from that point of view. But anyway, let's take a look quickly. So let me just open the actual presentation. I can walk you through it here. So what we want to do is sort of take a look and see what's new. And one of the reasons why I thought to make this video is because one of my Twitter connections, 2 Cent Oil Baron, and you can follow him if you can make out this handle here. It's AVGJANEEXB2. Otherwise, just search for 2 Cent Oil Baron. You can follow him. Send me a note, and this is via Twitter. And he said Occidental reduces debt again, and he included a Seeking Alpha article, which I've taken a couple of snapshots from, so that you don't have to go and read it unless you would like to. The response to that was also from my other Twitter connection, Aldois, and you can follow him on Aldois Huxley. Obviously not the original Aldois Huxley, but he is number 77, so I'll give him that. But he replied and said, 2022 Q3, Q4 dividend is in play. Is Aldois correct, or is he incorrect? Is it going to be sooner than that, or will we have to wait a little longer? We are right on track. He says, world energy crisis on the table, along with an unusually cold winter. We could see a spike in WTI in the coming months. I think for sure, although we're going to see a spike in WTI in the coming months. We probably will have a very cold winter. I think so, although it's very difficult to trust the weather forecasters in that regard. There is a world energy crisis. There is definitely more demand than what there is supply right now. Just last week, I read an article that said that the US is currently consuming at a rate of approximately 20 million barrels a day, and we're only producing about 12. So that's not a good position to be in. It just increases the sort of spread or the chasm is a better word, between the supply and demand. What happened this week? So Occidental filed a Form 8K. And sometimes, as you'll know from the past, when you've watched some of my videos, I've actually gone into the 8K or 10Q or whatever the case might be, and used the actual SEC filing as the foundation for my video. So what I've done in this particular instance is I've gone back to 2 Cents Oil Baron's tweet that he sent me, clicked on that Seeking Alpha link. And by the way, if you want to go read the article on Seeking Alpha, you can. It's Occidental reduces debt again, and these guys write for a penny a click. So anytime you click his article, at least he makes a few pennies. You know, don't be shy. If you want to read it, the entire article in its full length, do look it up on Seeking Alpha. What's the highlights reel here? The company paid back more debt in August and September. The reason why they had to file that 8K is because it's a material event in terms of Oxy's current financial standing. Interest savings are starting to add up. If energy prices hold steady, and they appear to be holding steady, the dividend return is getting closer, which is kind of the same thing that Aldoa said. So it says that Occidental Petroleum continued to improve the company's balance sheet in August and September by using excess free cash flow to reduce approximately $1.3 billion of debt and settle $750 million of notional interest swaps. In August, Occidental repaid $224 million of 2.6 senior notes due in August 2021, and in September retired $1.052 billion of floating interest rate notes due August 2022. The estimated annual interest related to these repayments is approximately $22 million. Now, this is important and it's material because as they pay down debt, the actual interest charge is obviously diminishing at the same time. So this is sort of a double whammy of good news, because the debt wall, according to Wall Street, is kind of disintegrating, and at the same time, the interest rate payable on that debt is reduced every single time Oxy knocks a big dent in the outstanding long-term debt. Also in September, Occidental Cash settled $750 million of notional interest rate swaps with September 2021 mandatory termination dates for $815 million, which will result in an estimated annual improvement in cash flow from financing activities of $49 million. Well, we all know that Oxy is in a good position from a cash flow point of view, and their free cash flow this quarter might set a record which beats last quarter, which was a record in itself. I think they said on the conference call it was the highest, last quarter was the highest free cash flow they had generated in more than 10 years. Year to date, Occidental has repaid a total of $4.5 billion in debt and retired $750 million in interest rate swaps, which are estimated to result in total annual interest and financing cost savings of approximately $170 million. So this is adding about almost $200 million to the cash flow, if you look at it that way. If you look at this chart here, you can see that there's a gradual decline over the last few quarters. Starting in Q4 of 2020, it was over $400 million per quarter, and it's been declining slowly. And let's see if we can get it down to about $300 per quarter as Oxy keeps knocking the long-term debt for a home run. What happened last week? So I looked at Oxy. Obviously, as I said, I've been traveling, so I haven't been able to follow everything. But last Monday, we opened at 25.74 and everything crashed. I actually made a quick video called Mayday, Mayday, Mayday. By the way, Robert Burke, who's one of the members of our community here and who provides us with a lot of comment and content from time to time, wrote me a little jingle based on the Beatles song Obladi Oblada. And I am very tempted to perform it for you, grab my guitar and play the actual little jingle for you. And I might add another line or two or a verse that I write myself. But hey, at the same time, I don't want to scare you away. So maybe I'll be brave enough to sing my rendition of Obladi Oblada, co-written by Robert Burke, for you. But what happened then? On Wednesday, Oxy bounced back 5%, and the very next day, another 4.5%, basically recovering all those losses and some, and closed the week at $28.45. So the $28.45 was the last trade before the market closed. After the market closed, it was a slight little pullback, and Oxy closed at $28.10 for Friday. So that was basically at the end of trading on Friday, just over $28. You can see there's a little bit of room left for us in terms of that 52-week range as Oxy tries very, very hard to get back up to 33.50, which is the 52-week high. I, for one, would be delighted to see Oxy at 33, because at $33, that would provide me with a three-bagger. What happened at the end of Q2? So if we look back, Oxy's debt to capital ratio was, I say was because now it's 2 months later, 66.37, which was in line with the oil, gas, and consumable fuel industry norm despite the increase over the last year. With an interest coverage ratio of 1.15, which is good, and a quick ratio of 1.15, which is very good, the company should be able to comfortably repay its debt. Now, of course, earlier on in this video, I shared that they're doing exactly that. Just very quickly for people who like ratios or follow ratios, a quick ratio gives you a ratio between the current assets and current liabilities. You want the current assets to be greater than the current liabilities, so a ratio of 1 or greater is preferred and certainly desirable. So Oxy, from this point of view, in terms of its financial strength, is looking pretty good. So guys, is this the tipping point or not? I went to our favorite analyst collaboration site, Tip Ranks. Currently, smart score 10, outperform. That's 10 out of 10 in case you are not keeping track. Analyst ratings, moderate buy, target price 33.45, which is back to that 52-week high. When do we hit $33 per share, guys? What do you think? This quarter? Next quarter? I'm not sure. The blogger opinions are all bullish. The hedge fund activities have decreased. We know some of the hedge funds have sold some of their stocks. We talked about that in some other videos. There's been some insider activities, over $515,000 worth of shares purchased over the last 3 months. I bet you Steve Chazen bought a fistful of those. The Tip Rank investor sentiment is negative. The new sentiment is bullish. Technicals are positive and the fundamentals are negative, but this is a trailing 12-month fundamental tracking. If you do it on a most recent quarter basis or otherwise, as we add the third quarter totals into this, the fundamentals are going to change quite significantly. So guys, it's kind of a wrap, you know. So on that note, it's back and over to you. Give me your comments. Tell me what you think. Is this the tipping point for Occidental Petroleum? Is this the stock that's going to finally arrive at a point where people say there's no longer a wall of debt? And this is certainly a potential outperformer in terms of the energy players as we know them in the market today. If you like the content, please subscribe. In the meantime, get on the comments site and let's get some conversation going, and then you tell me what you think, because as usual, you guys are the smart guys. And remember, Mr. Burke, I haven't decided yet whether I'm brave enough to do obla-di obla-da, but I might be tempted to do so, maybe after a glass of wine or something like that. Anyway, thanks for watching. I'll talk to you guys soon. Bye-bye.